We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back and we're live. Oh, internet stuff. Yeah, these guys are busy taking over everybody else. Just get it right. Comcast used to be fantastic, and for the last 6 months, unreliable. Unreliable. All right, so the Dow is down. This is the June 15th edition. Running a little late, but we'll catch up. I was on with Tommy Jr. earlier at 10 o'clock. Everything worked out fine then. So the Dow's down 222 at 24,951. The E-mini is down 14. This could, in fact, turn out to be a peak D of significance only if there's a close in the E-mini below 2770, and we're at 2774 right now. The cash S&P also needs to break and close under the 9-period exponential moving average for me to get some kind of a signal here. Now, the MACD is still good. The stochastic's good. So it's really price that's going to dictate the direction. Could be a later, options exploration. There could be a little bit of a rally going into the close from the recent lows. We'll see what happens intraday. Most importantly, what we're looking at here is the levels to watch. 2750 over the next 2 days, really important support in the S&P. A bounce to the close yesterday of about 2784. I'd say that's really impressive. I'm not sure that can happen. I can see a little bit of a bounce here. Meantime, the QQQ has been relentless in its support. It's down only 78 cents. At 176, the Power Shares QQQ Trust Series. This is the NDX 100. And the key support's going to be if it closes under 175, over the next 2 sessions, that's going to be very poor action. For my webinar last night, and thank you for those who attended. If you're interested in my newsletter, you'll get that webinar. And I think it was pretty important. I discussed a lot of aspects that have been in effect up until now, and the effect is going to be that perhaps now we're looking at some divergence as the dollar maybe takes the lead in the currencies, and it had been, but now it's starting to show that maybe it could break upside. And the most important thing is that we've got rates. I'll talk about that as we move on. So here we go. QQQ, very impressive if it's able to get back to 177.50. 177.89 was the high of yesterday. If there's a pullback today and there's no new high, this is F/C in the Chapman wave methodology. Leg C in the weekly chart, that's very positive. I'm not calling it a G. I think it's really a C because the technicals have improved. So I'm looking at a consolidation. I'm not looking for a major, crunch to the downside. A rotational aspect that takes markets that have been on a tear to the upside, give them a chance to breathe and get ready for another move to the upside later on. So IWM, leader on the upside. Pulled back a little bit, has made a peak D, Chapman wave 2 bar. It's actually a 3-bar reversal, but it hasn't broken down. It's at 167.12. 167.94 was the high of 4 days ago. Leg B in the weekly chart, and this is going to be very important because it has broken out in the monthly chart, but it's only mid-month, exactly mid-month. Let's see what happens over the coming 2.5 weeks. We've got the gold, which had moved up higher yesterday early, and then the dollar just took off with Draghi statements, and the dollar screamed to the upside. Gold plunged. Gold yesterday moved lower from its high, but then today it just plunged. It's down 28 at this point. I'm a little late, so I got a bit of a delay, but minus 28 right now at 1280. This is going to be very important. Why? Because within the context of patterns that I look at, and this is something I went through in great detail earlier on with Tommy in the Nadex Bull Bear show, that lower H pattern goes to a rectangle formation. In fact, let me just draw it so that we know we're talking apples to apples. That becomes, in the Chapman wave methodology, one of the techniques I developed many years ago, a one-to-one. I call it the propeller shaft to the downside. This becomes the fulcrum for a move that can go. I say sometimes it's one-to-one. I like to think of it as a one-to-one ratio, and we'll see whether it does or it doesn't. But that says that there could be a move, and that would say the move could take you down to really important support. This major trend line, I've moved it a little bit down to be as cautious as possible. But if 1260 is taken out, gold is going much lower. But in the meantime, it's just consolidating in a very big arch formation. The low that was made in gold in December of last year at 1254, that must not be broken, because then you got something else. But what we're looking at really is that the dollar XY, which is down 13 cents right now, squeaked to a new high, but it hasn't closed a new recovery high. It hasn't closed over the 95 right here, over the 95.03 level made on the 29th of May. It's going to be very important what happens to the dollar at this particular stage. Why? Because it's gone to a leg D in the weekly chart, and that leg D is at 95, I believe that's 16, 95.13. In this particular methodology in the Chapman wave, you need to see whatever you're following with this double top pattern break and close nicely. When I say nicely, that's not a term you'll find in any technical textbook. What I mean by that is quite comfortably above the previous high, and that's in this case the 95.03 high of the 29th of May. It needs to get, say, into the 96.20, somewhere around there, and it needs to close in the 96s at least for one session in the daily chart. And what it does is it takes the magnet of the 95 level that drags the dollar up. It needs to turn it into a reverse magnet, so it pushes it away. So it loses its magnetizing ability. And that's what we need to see. And I want to see it on a weekly chart. The weekly close above 96.25. I'm saying great. D can go even higher, and still a leg A in the weekly chart, in monthly chart. This is important. Look at the euro. Euro, of course, has done the exact opposite. I was asked the other day. Why? How did I get to, for subscribers to my opening call, how come we went long at 90, just a fraction over 90.07, and the dollar is already in the 95? How come I went long? Well, look at this chart. This is the euro, and it made a peak D. And the Chapman wave D, the fourth highest peak, is where other things can happen. And that's exactly what happened here. Triple top at 1.255 for the euro-dollar currency pair. The 16th of February makes this huge arch formation. It actually went sideways for a long time before it broke down. And that was the one-to-one pattern I was actually talking about, because it was something we were watching in General Electric. It's the propeller shaft, this whole rectangle here. I don't want to mess up my charts, but I'll do it. I'll do it for us. That is the propeller shaft, down, sideways, and then down one-to-one. Well, it wasn't one-to-one. This is like a 1-to-4. So it goes all the way down, and there's another peak D and an arch formation. So the euro is having real problems here, but it hasn't broken down. If it takes out 1.415, that's going to be a problem. Okay, we have Scott in Safety Harbor. Scott, I'll be right back. Hold on. Basil Chapman live. Tiger Technicians Hour on the 15th of June. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So we're back, and we're going to go straight to our first caller. We've got Scott, Safety Harbor. Scott, I haven't heard from you in a while. How are you doing?
Well, I'm doing fantastic, Basil, and you haven't heard from me because I've been digging in so deeply on VMC. Last time we spoke, I put a buy call in on it. It was 126.50. It turned around probably 2 days later, and I got cashed out 3 times on the way up to 121.
Yeah.
And then I caught the rhythm, and I just started. I know it's an expensive stock for a lot of people, so it's difficult, but, you know, I'm buying a lot of it, you know, up to 3,000 and 4,000 shares. So I am just, I am either the luckiest person. I'm going to say blessed, because I have to just give credit where credit's due. I am the dumbest stock trader there is as far as the technicals and everything else, but I have a system, and it's worked. I hate to say it, but 100% of the time. From way back when we used to talk about Alcoa to X to CX to others, it's just worked for me. When I pick Quale, and I have a few parameters that I use, and it's it's
so
worked.
Are you still going in and
I feel as though that people keep focusing on
Scott?
the Dow all the time, when it's really the individual horse, the individual company. There is some fundamentals involved in how at least people perceive that company, and it was perceived well as an infrastructure play, and that's what I've been doing.
So, okay, Scott, I wanted to ask you, are you still going, you still short-term trading, intraday trading or short-term trading?
Well, you know, not really on VMC. I was keeping it up to 3-4 days at a time, but I put tight stops in. And, you know, on that particular stock, when I got in at the 126 level, I'm doing 1,000 shares, so I'm getting cashed out at $1 every time, so it's only costing me $1,000.
Well, that's good. Okay. So let me just go through a couple of things, because VMC, I've not looked at Vulcan. This is very interesting. I haven't looked at Vulcan Materials for for ages. It used to be one of the stocks that was on my list all the time. I would say used to. I'm just going to give the choice. Yeah, way back in 2004, 2005, 2007. So, but I haven't looked at it for ages. So I'm bringing it up now. I've got it in a weekly buy mode, and buy mode to me implies that it's in leg B right now. It should, and look at the rhythm of the weekly chart. Every time it's gone into this buy mode, well, I just did it quickly a few moments ago. It's really had a very nice move to the upside. Even if there's been big pullbacks, it's gone to that D. And what's really important about it is that it's part of the economy that obviously is the one that's working right now. So I like the fact that you're using this as both a position play and a trading play, because the trend at this particular point is still up, even though the technicals and the daily are starting to weaken. It's kind of crawling. If you can see my chart, the 9-period moving average, that black line in the daily chart on the left, it's crawling since it went above it on the 23rd of May. Even though it's pulled back, every time it's closed either on or above the line. It's not spectacular, and it's making this very wormy shape. I call it, it's like a worm on a branch of a tree. It's just kind of crawling up very casually. So I like it, and I've got it so that it should go. There should be a move in the next couple of days above 132.77, which is going to make leg D. And then I think it's a little bit vulnerable if the market remains vulnerable. But I like it on a weekly basis as a long-term position play. I'm going to put it on something to watch. I prefer to be looking at it more in the 127 to 125 area if it can pull back. But I think you've got yourself the kind of stock, I don't have to tell you because you know and you're doing it. You've got the kind of stock that has good fundamentals. From the chart, it looks like the fundamentals have improved a lot. And from the technicals, it's holding gains very nicely. Not big moves, but big enough for you. You don't need much more than the point or two.
No, that's all I need, and it also has what I call the public perception. It has that it's in play with people as far as the infrastructure, and it's no different than the VXX. I mean, its time will come. Even when it drew back to that 121, it's Vulcan materials. Where else are you going to buy this stuff? These are things that are utilized and going to be utilized more and more. So it doesn't really matter what Trump says or anybody says. Eventually, right. You need these type of companies, and massive volumes are just around the corner. I think a lot of cities and municipalities are putting off a lot of things.
So
and time's running out. As you know, where you live, where we live, needs repair.
Yeah. Oh, everything needs repair. So, hey, Scott, I'm real pleased that it's been working out well. I was wondering about you just the other day, but now you're calling, and I can hear things are going nicely. Keep it up. I think VMC is right in your, what would be bailiwick, right in your bailiwick. There it is. So thank you.
To everybody down here in Florida, stop complaining about the heat, because if you do, God's going to make it snow. Then you're going to really complain.
It's so simple. All right. Thank you for calling, Scott. Have a great weekend.
Thank you.
So, folks, that was very good that Scott called in, because in a market that's down, the Dow down 220, S&P's down 11. Let me just go on with what I was looking at here. So I was talking about gold, and gold right now is still down sharply. It's down 27. Coming back just a fraction from a really ugly candle, this leg E in the weekly, and that, as I said before. Now, other resistance is really strong in the 1293 to the 1298 area. We'll see what happens with gold. But the dollar is very interesting. Now you would expect the dollar would be following through sharply from yesterday. I actually like what I'm looking at right now. The dollar is down 9 cents. I'd like a little bit of a breather, because if the dollar was up maybe at the 90, it's at 94.75 right now. If the dollar was in the 95.22 area, there'd be a short squeeze, and that would push the dollar even higher. And then we'd have to be looking at this and saying, oh no, because the dollar would then get overbought very quickly. This way, nice and steady. I like it, but it's still in that double top formation. And I'm saying, yep, we're long the dollar for subscribers, but now we've got to be very careful to see what happens. Would we like to add to it? What are we going to do? I haven't done anything yet. We got in nicely, and that's the way it should be. I don't want to mess around with it. Let it tell me. So that's that. Now, crude oil, this is very interesting. Look, crude oil at this particular point, when I looked at it earlier, it was down. Now it's really down. It's down 2.19 at 64.70. Here's this pattern that I've been talking about for a while. Peak D in the daily. Remember the Chapman wave, you look for those Ds. D at 77.90 on the 22nd of May in the daily chart. I was asked earlier on when I was doing Tommy's show about the peak Gs, and I spoke about G/C going to Ds. So this is absolutely relevant to that. So what I am looking at this particular point is peak D in the weekly chart under the 200 period moving average. Now I'm saying that crude oil and the weekly chart is in leg D, probably a peak D. I'm going to say if you look at the USO, for most of you, lay people don't have the futures, they're not looking at the continuous contract. But if you're looking at the USO, which does the same sort of thing because it trades off crude oil, D in the monthly, D in the weekly, D in the daily, gap down, island reversal. There could be a one-to-one to the downside. I'm not going to say that happens until I see the USO trading under, it's at 13.10 down 42 cents. If it closes underneath 12.90, there's a chance you could go even lower in crude oil. I'll be back with talk about bonds and other things. Basil Chapman, Tiger Technicians Hour, Dow at 290.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back. Dow's down 211, S&P's down 10, and we're looking at the three yields. This is the 10 years, the white one, TYX down 24 cents. The 10-year TNX, the brown one, is down a little bit, and the 5 years down a little bit. And what we're looking at here is the cluster that was formed with this top. And my contention, and this is just a contention, I don't know if it's going to work out. If there is a chance that that the market is going to pull back very sharply from here on a daily basis. I'm not talking about the weekly intermediate term. I'm just talking about a sell-off that takes the Dow at 24,000. What are we at? 960 right now. If the Dow goes to 24,005 or 400, somewhere around there. But let's just say by next week we're down another 200 or 200 points, 200, 300 points. We will see where the money is flowing from the insecurity of securities, that is equities, into the safety of bonds. And that's really what I'm thinking might happen, because yields should go higher over a period of time. I think we've changed the Japanization of our bond yields philosophy. I think that's changed. In other words, going to zero. Now I think there's going to be a slight, why wouldn't there be a slight expansion if the economy is strong? We'll see if that takes place. But with all the good news, this is something I spoke about last night, that sometimes with all the good news, like what happened in January about the 14th or so of the year 2000, that was great news, except for those high techs that were absolutely, that was fake news, if ever there was. They were counting eyeballs, they were counting letters, they were counting clouds in the sky. There was nothing real there. And they paid a big penalty when the Qs, the NDX dropped over 80% after that. So I'm looking at this and I'm saying there should be some kind of movement into bonds if the market is going to pull back. But I'm suspecting that we've started the move towards higher yields, right? We haven't really broken out. So in the TNX monthly 31-year down channel, yeah, we've broken to the upside, but not in the 30-year. And I think I'd wait for the 30-year to do that. But if you're looking at something that I usually correlate together with all of this, is that wood, the iShares Global and Timber and Forestry ETF, is down sharply again today, down 47 cents at 80.37. It was at 83.88. I say sharply because look at this incredible up move. It's gone through 3 iterations of rising trend line support. And now it's breaking this particular one right now. It doesn't have many of these big red candles. So we've got to make a note that this is the first Friday big candle down. What happens Monday is going to be very important. And what happens all of next week in this, because this is global timber and forestry. The HGX Philadelphia Housing Index, spoke about this as well last night. Not good action here. We should have seen much better action in the real estate. I spoke about this in context of the larger trend that I look at for my mega coda phase. And that's saying to me that within the context of, that's interesting, within the context of the markets, we're looking at, that is the housing market, we're looking at a level of participation in some areas that is higher than it's ever been, and prices are higher than they've ever seen. And at the same time, we're about to go into a phase with just the very best of the best, those mega houses, the ones that we look at and we just shake our head and say, how can 2 or 3 people live in a huge mansion like that? That's what's going to be for sale. And that's what I think is going to happen in the auto industry as well, that the best of the best are going to be seen buying and buying and buying, and you're just going to get a lot of stuff that sits on lots. It just doesn't move. So anyway, let's get back to the nitty-gritties. So the TLT, as I'm looking at it right now, what I'm thinking is if the TLT at 120.48 trades at any point in the next week and a half or so in the 123s, our stock market, the United States market, should be really pulling back quite sharply. Okay, now let's go to the different aspects that I wanted to talk about. Let me show you something. Well, I'm going to do this because it's Technical Friday, a bunch of technical things I promised I would do. And one of the things that I wanted to do was to show you in the 120 minutes Dow chart. This is what you, so if you want to listen to my webinar from last night and you want to subscribe, it's a money back guarantee, so it's really a win-win situation. You'll see how I use the Chapman Wave methodology, because every day I show the 120-minute chart, naked I call it, and then with the MACD and the stochastic, we're in a leg D to the downside in the 120-minute chart. We've gone to, this is a Chapman Wave 5. We had the 5 conclusion on the way up at 25,402. We're on the way down now. It's in 5. There could be a bounce at any point. I'm thinking only a bounce. We'll see what happens. The MACD is still very negative. Stochastic is down at 14%. It's starting to show signs that it's attempting at least to get some kind of a bounce going. In the daily chart, this is what I sent to subscribers as well. And I said today, if the Dow is down minus 80 at 1110, there should be a very weak close. So, of course, so far that's active. So here's the daily in leg A down. And this is the first time it's gone under the 9-period moving average. This is the first time I'm able to say the Chapman 5 to the upside again concluded at 25,402. And that was, what day was that? That was on the 11th. Green leg A down. The 9-period moving average was my first target, but we haven't closed under it. Well, we've not only done that, we've actually tested the red line, the 20-period exponential moving average. This says that there's a big change, and I'll show you what my subscribers will know that from tomorrow morning, Saturday, I already start sending out the charts, a lot of charts for Monday's opening call. So they'll have a lot of time in which to prepare and look at things. So this is what I often show, and this is the pattern that I've been looking for. This inverted V-shaped pattern. It's really the arch formation with the second arch forming. I have no idea if it's going to do that. We haven't even started a leg down here in the weekly chart. So this is very important. Why? Because if next week on Friday we've closed below 24, what is that? 24,600. That's a long way, 350 points from here. That is the 20-period exponential moving average. That'll be quite negative. It'll be the first time that there's been a close under that in quite a while. We've been under it. We haven't closed under it since back in the week of the 4th of May. So anyway, I'll discuss this in detail for subscribers. But my webinar last night was really looking at the divergence between, even within sectors, you've got divergences. But the major divergence was that the dollar seemed to have a lot of strength in the weekly chart. The gold was okay, but it looked like it could do some testing of support if certain parameters were hit. And even more important than that, when we're looking at the crude oil, I didn't mention crude oil. I only mentioned it briefly, but this morning I did when I was on with Tommy. With crude oil, all of a sudden, and it had a rally. What I did say was crude oil had a pretty good rally, but if you look at it in the context of monthly charts, look at this. Crude oil, oh boy, that was quick, another break. Well, only one little segment to go. Crude oil looks fantastic like that. Let me squeeze this monthly chart on the right, and you'll see something amazing. Look at this as we go to the break. Crude oil was up in the 120s, now down to 64. It actually hit 39. So crude oil is stuck in the lower rank. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Okay, so this is going to be very important. Let me do a couple of things here. Yeah, and this is live, so if you're listening, that first part was a replay of the early morning show. I just had terrible internet problems. I was looking at the, this is called the continuous contract of natural gas continuous contract. Now, I wouldn't be trading, I don't trade natural gas. I'm just looking at the chart. And what basically I looked at was the daily chart. It made a peak D, and then there was a rectangle formation. I love these rectangle formations. And it says within this rectangle formation that was made right there on the 29th of May, there should be another inside, at least in the 120-minute chart, a series of peaks going to a peak D. Well, it did that. But also the way it was holding, and this was before this big green candle, we were somewhere over here early this morning. And what I'd said was, I thought that there would be a breakout, and that if it was able, if the natural gas, this continuous contract, there's no trade, this is just the chart, if it broke and held above 2.03, that would be a really good action, both in the daily and the weekly. Well, today it suddenly spiraled up, and it's trading, it hit 3.03. I meant 3.03. Well, it hit that number. Now it needs to hold above there for 1 or 2 days, and that gets that cup formation and rectangle formation. It leaves it and says, I've reversed the polar opposite. Instead of being the magnet going to the $3 level, I'm now treating that as a base of support. Okay, so in my opening call, that's my daily newsletter. We've started raising cash. We did switch from the long side of the Dow to the short side of the Dow. Only today at the close will I be able to possibly put down a down arrow, because the Dow had still held pretty darn well. The Qs have held very well. So now the Dow's down sharply. I believe I'll be able to put a down arrow to say we've at least got a sell signal, not yet a sell mode, but a sell signal. For a sell mode, I need the MACD to cross negative and the stochastic to go from 83% to under 80%. So this is just a process. So that's what we're looking at. We are still short the semiconductors, and we have cash, and of course we long the dollar. This is going to be an interesting period of time. I think raising some cash is not a bad thing to do. Check out my webinar from last night. Check out my opening call. Stay tuned for Steve Rhodes, Dave White, Tom O'Brien. I'll be back Monday. Have a great weekend. Thank you.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.